Hi, this is Daniel, and you are watching Unrivaled Investing. This is a no hype financial channel that is mission focused on finding exceptional companies and unrivaled investments. Today, we are looking at NIO, ticker is NIO. This goes out to Michael and Odwin and all my other Journey and YouTube subscribers that have asked me to make a video on NIO. A lot of people are asking, so I want to know, hey, what's all the fuss about? This video goes out to you. And so why is it potentially interesting? First, the stock has gone parabolic over the last few months, up several 100%. Recent revenue growth of around 150% year over year in the second quarter. And this company has several directional similarities to Tesla. But before digging in, a quick plug. If you like learning about potential multi-baggers, make sure you subscribe. If you're already a subscriber, I appreciate the thumbs up. It really does help the Google algorithm, or so I believe. And also, if you're interested in following my personal journey to find multi-baggers, go to unrivaledinvesting.com, click on Journey. I love it when you leave a comment below saying, hey, take a look at this video. I think they have an unrivaled value proposition. So leave a note below if you think you have a company like that, and I will add it to the list. And eventually, boom, 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 we are going to knock these videos out one company at a time. So jumping into NIO, what is NIO? NIO is a pioneer in China's premium EV market, so electronic vehicle market. But it's not just about making cars, but about revolutionizing the industry. We'll touch a little bit more about that in the coming minutes. So the company was founded in 2014. They had deliveries on their first volume vehicle in June 2018. It was the ES8. You can see the picture over here. That's sort of the second point I want to bring up on this slide. Their first car, and this is similar in Tesla fashion that Elon Musk penciled out years ago, was that you start with this super premium vehicle, the super luxury sporty car. For Tesla, it was the Roadster. For them, for NIO, it was their supercar EP9, which supposedly cost something like $1 million to build or per vehicle, and to work from there. And so this is their first mass vehicle, and it retails for around $70,000. And it's an SUV, so that's a big difference. Not looking at starting with a sedan. They focus jump straight into the high end SUV market. And then since then, they've had several additional products. They launched the ES6. First deliveries were in June 2019, intended to be smaller and more affordable, retails around $60,000. You get the crazy, pickup that you get with electric vehicles, 4.7 seconds, 0 to 100 kilometers. And lots of cool features, all the sexiness that you would expect from an electric vehicle. And then an additional product was launched, their third mass volume intended for mass market, electronic vehicle, the EC6. First deliveries were in September 2020, so relatively recently, and it's a coupe with a vault glass. So once again, you got this big glass, so it's really cool. You can look up at the sky. Think Tesla once again. Retails around $53,000. These are ballpark figures. Obviously, the figures are in renminbi, so it's different than what it is in US dollars, because this is a Chinese EV company, Chinese electric vehicle company, primarily China right now. Their goals are global in aspirations, but right now it's China. So neat features about the EC6, it's more affordable and better performance than all of the competitors. And they call this out where here, you can see Mercedes-Benz, Audi, BMW, Tesla Y, the two different types of Tesla Y, Mercedes-Benz. And they're saying, look, 4.9 seconds, the 0 to 100 kilometers per hour, 4.9 seconds, and this is the cost for the vehicle, 686,000 renminbi. And versus what they're looking at with the EC6, where the cost ranges from, let's say, 468 to 526, depending on the type of model that you have, and the range that you're looking for on these. And so you can see that it is pretty dramatically cheaper than all of these sort of foreign companies that they're competing against. So it's cheaper and has better torque or better, pickup than a lot of these guys were. For example, this Audi, which is 668,000 renminbi, theirs is 408, and it's 4.5 seconds versus Audi, which is 5.3. So, they're sort of saying, hey, if you really want to get that sporty car, we have the pickup and we're more affordable. So we think we're going to take share over time. So it's more affordable and better performance than its the theoretical competitors, even beating out Tesla on one of their editions of the Model Y with 5.1 seconds and 488,000. So, but additional perks for the EC6 owners, and the founder of NIO, he calls this out in a recent video saying, look, you are entitled to 5 lifetime free services, which includes free warranty, free power swap, which is battery swapping services. We'll get into that in a second. Free roadside assistance, free car connectivity, free out-of-town power service. They're really focused on making this a really great experience for the users, which is super important to reflect on. But longer term, we need to think about what the margins are going to look like with this. And maybe we'll get into that in a minute when we're talking about the valuation of this company. They also have a direct-to-consumer business model similar to Tesla, where they skip the dealership and sell direct-to-consumer via these things called NIO Houses, NIO Spaces, and their mobile app. So the mobile app, that's fairly self-explanatory, but they have these NIO Houses and NIO Spaces that are sort of like WeWork, except for NIO owners. And you can see like, hey, there's a library to indulge yourself in knowledge or relaxation. There's a cafe, bookable meeting rooms, and like this whole concept seems kind of ridiculous to me to have WeWorks. Like WeWork, I don't think it ever proved the profit model, and to sort of have this share. So to have this sort of startup, EV company or a fast growing EV company to sort of layer in a WeWork aspect to create this sort of brand, I'm not sure how that would impact I don't see how that could help margins long term. That would at least be my perspective. And so far, as of June 2020, they had 22 NIO houses in 105 NIO spaces in 83 cities. So it is a concept that they definitely are rolling out to help sell their vehicles. That said, so they're clearly trying to build a brand, and I think that might be reflected in their customer referral rate, which is around 62%. I'm not sure if this is apples to apples to an NPS score or a net promoter score. Either way, you want customers to be referring your brand to say, hey, I bought this car, I think you should too, because then you don't have to spend as much on marketing. Because if your customers become your main brand advocates, then it's easier for you to grow. You don't have to spend as much. And that's something that Tesla and Elon Musk understands very well, where his marketing budget is close to zero, but it's all about having this sexy appeal and sending your cars into outer space. So a common complaint with the EV owners is like, hey, do you have some duration anxiety? Like, how far can you go? And NIO has got you covered. At least that's the argument that they're making, like with several different power solutions. You have Power Home, where you can, plug in your car at home with their technology, with their outlet. They have a battery swap, which is a super fancy video that you could watch where it appears like it's completely automated. You just drive your car in, zoop, 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 and 3 minutes later, you've got a newly fresh battery fully charged and you're ready to roll. Like, that's incredible. 3 minutes in and out, and now you're ready to keep going the distance. Geez, this looks cool. If you watch the video, you'll go, wow, that definitely looks like something futuristic. Probably super expensive to build. Remember this point because we'll get to it in a little bit. Other types of NIO power solutions. They also have Power Mobile, where they send a van to charge you up. So they have batteries in the van, they charge you up. I wonder how practical or economical it is to have a presumably fossil fuel truck, or van driving around to power EVs. Like, it kind of like defeats the purpose if you just have a fleet of fossil fuel vehicles powering these EVs. Like, not doesn't quite work. But anyway, that's one of their ideas. They're trying to make the point that it's about the ease of the users. Like, if you don't have a charging station at your office and you desperately need one and you're in a meeting, you can summon it and it'll come to you. They also have very, sort of traditional power charger stations, fast charging. And that's the type of thing that you would see expected to be rolled out in buildings or retail outlets and things like that. And then they also have Power Express. I thought this one's super cool, where it's NIO is the first company in the world to provide car owners with mobile internet and Internet of Things technology-based valet charging and battery swapping services. So they come to you to charge up. So it's very similar to this mobile, but they could also come to you and change out your battery. So they can take your car, then go replace the battery, then bring it back to you. So that's pretty cool, all using your app. And then like all of this stuff sounds super cool. They might even be pushing the envelope with what they're doing with this battery swapping technology. And then you're like, well, wait a second, but I thought Tesla, this company worth hundreds of billions of dollars, was the company that was going to win, EV markets all around the world, including China. And you know what? NIO's got a few things going for them. First, they've got the Chinese government, working with them. And here's, there's a couple of things here that are worth thinking about. First, the current 2020 subsidy standard, effective from April 23rd, 2020, sets subsidies for 2 million vehicles as the upper limit of the annual subsidy scale, and provides that the national subsidy shall only apply to an NEV with the sale price under 300,000 renminbi or equipped with a battery swapping module. We believe the 2020 subsidy standard encourages purchases of new energy vehicles, especially our vehicles, my personal emphasis added, as they are equipped with battery swapping modules. So the subsidy said, look, it has to be under 300,000 renminbi or battery swapping tech. Most of Tesla's vehicles are above 300,000. Their vehicles are above 300,000 in terms of listing price. And so here it is, they get a special exemption because they're working with the Chinese government. Be like, oh yeah, Tesla doesn't have this battery swapping. We do. How about you give us an exemption because we have this battery swapping technology? So this is a special way of getting a subsidy from the Chinese government without directly saying, oh yeah, we don't want to support Tesla. So Tesla, in response, their prices went up. So they had to lower the price on their Model 3 just to get it just below that 300,000 in order to get, I think it's around an 18,000 renminbi subsidy. Then another quote about subsidies. From January 2016, the Central Finance Department started to provide certain local governments with funds and subsidies for the construction and operation of charging facilities and other relevant charging infrastructure, such as charging stations and battery swap stations. Certain local governments have also implemented incentive policies for the construction and operation of charging infrastructure. For example, operators of certain non-self-use charging infrastructure may be eligible for subsidies calculated based on electricity output. These incentives have and are expected to facilitate acceleration of development of public charging infrastructure, providing users with comfort in choosing electric vehicles with battery swapping modules, i.e., they're working with local governments and getting funding exclusively for battery swapping infrastructure. So that slide earlier where I was like, oh yeah, hey, doesn't this really cool futuristic battery swapping stations look really expensive? It looks super sleek and be able to change out batteries in 3 minutes sounds amazing. But how are you going to afford that? Oh, you're not going to have to put up the CapEx, the capital expenditures to build that. The local municipalities, they're the ones that are going to do that because maybe they want the jobs, or the central government, because this is China and they can direct like, hey, we want these companies to succeed. They're directing the local governments to say, hey, you're going to be the ones building out this infrastructure. We're going to tell the banks to provide the loans to you. And so this is like this whole game, like the Chinese government helping NIO to survive is a huge advantage that needs to be called out. And there's a good chance that NIO could dominate China in the years ahead, just thinking about this data point. The question is, how do they fare relative to their competitors? Then another aspect that NIO has, working for them is this BaaS model, battery as a service, where what they're doing is saying, look, you can buy the car without the battery, but you can get a sort of battery as a service model where you actually pay us a monthly amount. So how do the numbers, work out? Currently, if you do the BaaS model, you get a 70,000 renminbi reduction off the purchase price. Now that's like a 20% reduction. So it's cheaper on an upfront cost. So if you're like, whoa, the cash out that I need to do for this is 20% lower, you're that much more competitive. Meanwhile, the cost on a monthly basis is a little under 1,000 renminbi. So for the 70,000 kilowatt hour battery pack. And so why would someone do this? One, it's more affordable upfront. Two, you get continuous battery upgrades. So if the technology gets better, where you get longer, duration, faster charge time, like, hey, you're part of the subscription plan, so you can pay up for this newer model. Two, you don't have to worry about battery degradation over time. If you're worried like, oh, the batteries, they're going to get weaker over time, or it's going to take longer to charge up, or we're not going to get the same output over time, don't have to worry about that when you have a subscription program. Then another aspect is that the car value is independent of the battery, which is super interesting, because like on a resale value, you don't have to worry once again about that degradation. You're just focused on what's the value of everything but the battery of the car. So ideally, if you keep your car in pristine condition, like, you wouldn't see it degrade that much over time, because the battery is something that's just getting swapped out. So this strikes me as a super innovative business model. If they're able to really roll this out and implement it, that could really be revolutionary. It would be interesting to see how they deliver it and how they perform in the future, and how have they been performing. And they've been performing really well, at least on a sales perspective, where, revenue in the second quarter was up 146%. If you look at the first half perspective, the first quarter was hit by COVID, but on a first half perspective, it's up, I think, 62%. From BYD, which is a Chinese EV competitor, they also do batteries in general for like handheld electronics. They write, according to the data from the China Association of Automobile Manufacturers, the production and sales volume of automobiles in China were 10.1 million and 10.2 million units in the first half of 2020, respectively, down by 16.8, 16.9, so 17% year over year, respectively. Among which the production and sales volume of new energy vehicles were 397,000, 393,000, respectively, down 37% year over year, respectively. So the key point here is that during the first half of 2020, units of just regular vehicles, 10 million, were down 17%. New energy vehicles were down 35%. And here it is, they were posting revenue growth of 62% in the first half. So that, in my mind, suggests like there's a bunch of data points that you need to take away from this. First, whenever I look at any company, I always want to size up, how are they competing in the marketplace? Are they taking share from their competitors, or are they losing share over time? If you're taking share, it might suggest that you have an unrivaled value proposition. If you have an unrivaled value proposition, it means you're offering something, a good or a service, that's just better than others. Maybe it's a better brand that allows you to take share over time. And so if you have this UVP, you're going to continue to take market share over time, an unrivaled value proposition. And this data that I'm looking at suggests that they are taking market share, which might suggest that they indeed have an unrivaled value proposition. The second point is that they are tapping into a huge market. 10 million units in the first half alone in China implies around 20 million annualized for the Chinese market versus 40,000 annualized rate that they were at as of the second quarter 2020. So for them to go 10x potential, which is, I always want to see, can the companies I invest in have 10x potential? You need to be able to pencil that out or do it back of the envelope. Going from 40,000 to 400,000 units is definitely possible when you're in a market with 20 million units. Let's keep going. So what do I think about their valuation? This is my value proposition to you. I will include this sheet in the description of the video so you can click on it if you want to play around with the assumptions yourself. My end take is that whatever I pencil out here, you need to recognize stock prices can always go higher or lower than what someone pencils out. That is just human nature. You get greed and you get fear. Greed leads to extremes, fear leads to extremes. So just penciling out a logical framework doesn't necessarily mean that's exactly what's going to happen. It could definitely go higher or lower. That said, I like to take a multi-year perspective. So this is a 5-year view of what could NIO stock do over the next 5 years, and what are sort of the assumptions that we want to put into getting there. So here it is, around $41 a share, around $57 billion market cap. Let's convert everything to the renminbi, because at the end of the day, this is a Chinese company. So $57 billion company converts to 380 billion renminbi company. They did around 8 billion renminbi in sales 2019. They're forecasted, like I'm penciling out, they didn't forecast for the full year, partially because of COVID. They do have a forecast for the third quarter year over year, which suggests something around 130% year over year growth. So I'm penciling out anywhere from 14 billion to 18 billion sales for 2020. And so that's a range of up 80% on the low side and up 130% on the high side for the year. And then what's the optimized margins that you think they could be at, right in the future? Like what do you think they look at structurally? And this is where it's a little tricky, because if you look at something like Toyota, Toyota has auto margins. They're Toyota and most, car companies have, and Toyota is one of the most, profitable car companies out there if you exclude like major brands like Ferrari and things like that. I'm talking about mass production, companies, which arguably that's what NIO is aiming for. It's not just looking to sell, high end. It's looking to get mass market. And so Toyota has auto margins of sub 10% on operating margin perspective. Now, most auto companies have a finance book as well. I don't really see that here. And the finance book has much higher margins because you have a finance subsidiary that's taking on the loans or underwriting the loans. And that's really high margins, but then you effectively have this whole bank. And that's not what we're looking at with NIO. NIO, we're looking at their auto segment. So you should do an apples to apples comparison. So Toyota auto margins generally less than 10% on an operating margin perspective. And so I'm penciling out 7 to 15%. So I would need to see some really constructive developments to actually pencil out like 12.5, 15%. Maybe, this battery, the BaaS model, battery as a service gets you there, because I don't know how that can get you there. Like there's so many things here that strike me as higher costs that would result in lower margins, like this whole NIO Spaces thing. Battery as a service strikes me as potentially really a cost contributor, but maybe I'm wrong on these things. So I would need to sharpen the pencil. If you have an opinion on why margins should be much higher, I'd love to hear it. Maybe it's their development in AI. That's something they're definitely working on with, autonomous vehicles. Maybe they have a fleet, that they can start, leasing out over time, that sort of thought process. If you have thoughts, leave a note below on why you think their margins could be X, Y, Z, and a comp that maybe you're looking at that gets you there. Currently, just for perspective, they're at negative 30% operating margin. So I'm sort of, this is taking a little bit of, mental, optimism to say, oh, okay, you're at negative 30, you're going to get scale, and you're going to get to either a Toyota-like margin, somewhere between 7 and 12, on Toyota's less than 10, or 15, where it's like 50% better than whatever Toyota's doing. Slap on a tax rate of 25%, because that's the approximate tax rate in China. You can have, once again, Chinese government, they can change it. They could say, you know what, we want to increase the probability that all companies, all new cars are going to be EVs. And so we're going to lower their respective tax rates. That said, they're not going to be paying taxes for a while just because they're unprofitable. But you can see here that the implied multiple is somewhere between 28 and 78 times. Actually, you know what? That's not right. That needs to get updated. I'll update that in the sheet. But the growth rate I'm putting out is 35 to 70% in the next 5 years, and that's a pretty wide range of what I could pencil that out for. And honestly, they're tapping into such a huge market that it could be a lot. It could theoretically stay at a really high rate, like 70% for a while. That said, it is a pretty dramatic growth of 14 times versus 4.5 times what we're expecting them to do. So this would say by 2025, you're at 63 billion renminbi versus 256 billion renminbi versus what I'm penciling out at 14 to 18 billion this year. And then, what's the range in multiples? And this honestly, this is a real wild card. I'm putting an assumed multiple of 15 to 35 times earnings. That's based on looking at, once again, this optimized margin rate slapping on a tax rate, a tax rate of around 25%, and then taking this multiple of 15 to 35 times. And you can see, in this case, you're getting really a lousy downside scenario. You're down 87% versus its current market cap. So you're saying like, hey, 15 times multiple on 3.3 billion in renminbi gets you down 87% because 49 billion relative to 378 is a pretty sizable drop. This 25 multiple and 50% annualized growth gets you to 284, which is once again about a 25% haircut relative to its current valuation. And then last is like, oh, if you pencil out 35 times earnings, 5 years from now, 70% annualized growth. Like this is a pretty optimistic scenario in my mind. It's pretty aggressive. Then you get this 165% upside. And just to put a perspective on why valuation is a wild card, Tesla's peak next 12 months sales valuation, so price to sales, in 2010, it peaked around 22 times. To put this in perspective, this valuation currently for NIO, based on the range I'm putting of 14 to 18 billion in 2020, is somewhere between 21 times and 27 times. So that's like, you're already higher than what Tesla was at its peak in 2010. That said, if you had invested in Tesla in 2010, you still would have had a very satisfactory return over time. It would have been a very, very bumpy ride, because to put this in perspective, Tesla's low valuation on a next 12-month basis was 1 time. So that's a huge swing. And I would expect you could face the same sort of thing with NIO in the years ahead. I'm putting on a pretty wide range of assumptions. Upside, this could be a potential multi-bagger over the next few years, despite its run up so far. So I'm definitely, positing that. Also saying there's a lot of risk as well if you were to apply more conservative assumptions like 35% annualized growth and a 15 times multiple. The question next is like, well, what am I doing? And I expect ridership dynamics could change pretty dramatically within the next 7 to 10 years. And here's an article, that came out in October about how Waymo, which is a Google subsidiary, is opening its fully driverless service to the general public in Phoenix. That is really interesting. Like anyone in Phoenix now using an app can summon a completely driverless car. And that's pretty mind-blowing. So even though NIO is working on its own self-driving initiatives, how this plays out for unit economics in the auto manufacturing industry, that forecasting that out 10 years from now is super difficult. And the reality is 10 years, 5 to 10 years from now, that's where a lot of the value for NIO is going to be coming from. And so, does the aggregator of the content, the one who owns the app, who gets all the demand, do they, like the equivalent of an Uber, are they the one that gets the economics? Does the manufacturer like NIO get the economics? Does the software company that owns the AI and license it to the Ubers of the world, do they get the economics? So it's tricky, to forecast exactly who's going to get the margins in the future, who's going to have the leverage to push back on who should be, who should get what margins in the future. But if you want to, I would argue this is too hard for me at this point. But if you want to see what I am buying, you need to go to unrivaledinvesting.com. Click on Journey. You get to see what I buy, what I sell, what I hold. You can't take these shares away from me. Exclusive content just for Journey subscribers. I listened to my Journey subscribers. They asked me to make NIO. I made this video for you. And I also aim to identify potential multi-baggers each month. I just posted my November potential multi-bagger video. And the reality is finding just one potential multi-bagger can change your life journey. So if you're interested in following my life journey as I try to find these multi-baggers, go to unrivaledinvesting.com. And if you enjoyed this video, if you enjoy learning about NIO and its potential as a multi-bagger, please subscribe. If you're already a subscriber, I really appreciate the thumbs up. Thank you so much for watching.